Hi, this is Randy Finney with Right Side of the Chart, and this is a post-FOMC update. The Fed meeting is now out of the way, and I'm going to give you my thoughts and current trading plan on the market. And remember, I always say this, be leery of the initial reaction. It's often not the one that doesn't stick, or it's often not the reaction that sticks, I should say, on a post-Fed meeting. And you always, this is just textbook here. Chop and slop. Look at these ranges. 2 o'clock, little pop right there, leading right up to the 2 p.m. announcement. Shortly after, they faded it by 2%, turned around, rallied 1.4, turned around from there and dropped 1.62, and have since climbed up here 2.93. So this is probably the one that's going to stick now. So it's up my odds a little bit on that whole bounce from here thing, at least for near term. Let me tell you what I'm looking at here, actually, guys. I'm looking at a very short-term bounce, followed by one more leg down to still, and I have to word this carefully because really my odds haven't changed much on what I gave you yesterday. I gave you 3 scenarios, and one was that we bounced from roughly where we're at. Let me go to the daily chart here. Okay, that was yesterday. And remember, I said don't, oh, no, that's not, that's something happened here. I went to a 2-day. I mean, there's a daily chart right there. I said you're going to go into a holding pattern before the Fed. That's what we did. So it'll be chop and slop. So there's really no reason to, try to extract anything from the market. Now the Fed's out of the way. So here we go. We've just entered a gap. That's bullish, number one. And we've also taken out that trend line. Remember, pre-Fed leading up to the Fed, we had this breakout, put in this trading range, but then we broke to the downside. That was the downside break of the sideways range that led to these big gap downs. And now a gap, once backfilled, once entered, is usually backfilled. So here's the thing. I'm swinging this up to right here. I'm looking for a gap backfill. Possibly more. I may just set raise stops pretty tight there when we get there and see if we can run up at the bottom of the next gap, or even big level. I'm going to just show you upside targets, and again, so hopefully I can make my thoughts clear. So there's that big trading range separated by the gap right here and the big candle down, and then a gap below, almost an island cluster top. That'd be a max bounce target right now. So you can either trail things up, you can, you just don't want to short into the next objective short entry is going to be a rally into the top of the backfill, the gap right there. And then look, you still have, remember, I said we had potential positive divergence on the indexes. If we can continue up and do more than that, take out that gap, get into the next one, you're going to get a bullish crossover here, and you're going to have positive divergence on the very significant daily time frame. The last time we had positive divergence on the very important daily charts was back here. You had divergent low right there, and it gave us about an 17% rally, right? Positive divergence. So we have it now. Now, thing is, we're also, below there's some sell indicators that are still bearish. No doubt about that. So one possibility is, see how I have the line down here? That's where we're at right now. But if you pull that line down, so this is where, as of now, I'm looking at maybe coming here or at the top of the gap or somewhere up there at that other gap. Go on down and then put in a divergent low, but put it in at lower levels and go on to hit that that next target on the weekly chart right here, 268.30, and or that trend line. That's it. So when I say very near term, I'm talking today, maybe into tomorrow, little upside. We'll play it as it goes, then go on down there. Let me show you the 60-minute chart real quick, and then I want to get the video out to you guys. I also like treasuries. So here's my 60-minute chart. Oh no, 60-minute chart. I'm zoomed in real tight here. Keep in mind, I rolled to the September contracts, so the ones I was covering before have now rolled. So there's the bullish falling wedge. It was a breakout, but again, Fed holding pattern. But this is the most important thing to me, besides the trend line break, is this trading range here. Remember, coiled spring, right? That's my analogy. When you get in a trading range, we popped it to the upside. There's also a trend line here, so keeping tight tabs on long position. You got a trend line right there. Every 6, that's just post-Fed noise, and that's also a candlestick shadow, aka tail when it's below, means nothing. 60-minute close below that level. So right now it's very simple. anything here, that's going to be bearish, and that's going to take us down there. So we've had a little pop. It may still be an initial reaction, post FOMC noise. So if we go down there, and that may happen by the time this video is published, I'll be out of my longs and short, and then we may have that scenario. And here's how it's going to look on the 60-minute chart. See these lines I have here? So we could go down, whether we have a little more upside. If you're looking at the futures, there was a gap right there, a Sunday, Friday to Sunday gap. That's the only time, usually, once in a while, you get them when the futures shut down for an hour every day after the market closes. But most of the time, you're going to get these gaps on a Sunday, and there it is. So our traders are going to be looking at that. And so if we can get a little more upside here, or not, doesn't matter. But it'd be nice to see that, and then boom, come on down. And then what we would do there is take this line here. There's our current divergent low right there on the 60-minute chart. Extend that divergence, extend it out here, extend that line here. Boom. Come on down. I'm drawing what the indicators would look like. So that's it. So, as of now, we popped. We broke out. And keep in mind, another thing, we didn't just break out above this trading range. We took back this low. Remember when I was in Hawaii on vacation, we had that little, this was it right here, actually. We had a pop. There was our major reaction low, previous low. We hit it again, tested it, and then had that whipsaw through there. Came back, tested it once, actually put in a higher low, and then boom, big old tradable rally. Went on to hit T2, T3, whatever it was on NQ. I think it was T3 on NQ and T2 or T3 on QQQ. Yeah, T3, I believe. Either way. All right, so what I'm getting at here, that was a major previous reaction low, and we just popped it. But again, this is a Fed day. You take it with a grain of salt. If we turn around today and we break down, then we didn't regain it on a closing basis. So this is your big number right here, guys. About 11,533. Hold it, stay above it, great. And a potential rally would be all the way up here. Remember that trading range I just talked about on the cues that we had? This was it right here. And then we had a sell signal, solid impulsive break, flag number 1, flag number 2, both hit that double flag. It's rare, but it happens, and there it just did. That's going to give us about from the breakout point, roughly 8% rally. And that right now, at this point in time, my max target. Swing target, and then so it would still mesh with a call for those next targets on the weekly to get hit. It's just going to be short-term rally followed by an intermediate term or larger drop, and again, that drop could start today as well, could start tomorrow. Just watch. As of now, we have this nice short-term, near-term uptrend line you can replicate on NQ and probably QQQ as well. And you also have that big level there. Let me just go to QQQ for you Q traders and show you what that would look like on a 60. All right, 60-minute chart. Previous reaction low right there. That's that major reaction low. That was the breakout level, our recent trading range. As I zoom in here, 280.75 is the number. So right there, there's the breakout. 280, we'll call it, needs to hold there. Yeah, let me see if I can. Yeah, see, you don't have a clean uptrend line. Futures have trades you don't get with QQQ because the futures are trading. I'm using the Globex futures. They trade virtually around the clock there. There's a big old gap. Again, we entered that. There's top of the gap. There's gap number 2. Bottom of the gap's at 294, which was a big level. So there's a potential target as well. Each of these are targets. Top of the gap around 289-ish, 294, and then 299.30. All right, let's wrap it up here, get the video out to you guys, and we'll see how we close today, and you know my trading plan. All right, and that can change, and I'll let you know if it does, and you kind of know right now what'll change it near term. And again, I'm going to pour into the charts after I do this, wrap the video up, which I've been doing all day. Just didn't bother getting anything else out in front of the Fed because there was nothing new. Like I said, you're going to chop around leading up to the announcement. Now that the announcement's over, market's going to pick its next direction, both near term and then ultimately intermediate term, and we'll see where we go. All right, this has been Randy Finney with Right Side of the Chart with a video under 10 minutes. I'd like to do more of these going forward. All right, we'll wrap it up here.